Okay, hey everyone. Hi. Hi everyone. Can everyone just let me know if you can hear me clearly and if you can see my screen? Okay, cool. Thank you, RK. Thank you, Manny. I do see more and more of you still signing in, so I'll just give you guys a minute or two to settle in. Hi, Ati. Hi, David. Hi, Ivor. Hi, Ola. Hi, RK or Manny. Hi, Brian. Hi, Joash. Hi, Will. Hi, William. William. Hi. Welcome to our webinar. Okay, I'm glad everyone can hear me loud and clear. I think everyone's still settling in. Hey, Kurt. Hey, Jess. Hey, Tuan. Welcome. Okay, to not waste too much time, I'm just gonna go straight into the introduction. For those who just joined, do settle in. And then you wouldn't be missing much anyways because we're just doing an introduction for now. Okay, so today, IronFX is bringing you guys a live analysis session, right? Let's start with the risk warning and disclaimer. Please can't hear you properly. Hello? Can you hear me now? Okay, audio is okay for RK and Kurt. Ola, maybe you want to, let me just type it out, maybe you can't even hear me. Ola, sound is yeah, maybe you like to exit and come back in. Hopefully that helps. Okay, cool. I'm just gonna move on. Okay, so disclaimer and risk warning. Whatever I share with you guys in this webinar today should only be taken as educational. Okay, it should not be construed as trading advice. Please be reminded that trading, especially if you are trading on margin, Forex and CFDs carry significant risk. The risk is multiplied by the margin you are taking. So please do be cautious. The whole point of our webinars is to help you guys grow your account and to teach you guys how to be better at trading. Okay, this is not a signals group. It's not a forecasting group. Okay, let me introduce myself. My name is Cassandra. You can call me Cass, right? I am a prop trader and an investment analyst here at Everest Fortune Group. Okay, so Everest Fortune Group is a Singapore-based fintech company. We are an award-winning firm. We are the finalists for 2019, 2020, and 2021 for the best Forex and equity research. A little bit about our firm. We basically do a lot of research, back testing, strategizing on where we think the markets are going. We advise brokerages, banks, hedge funds, financial institutions of where we think the markets are going. Okay, so a lot of our time is spend on research and kind of understanding the charts and how the markets move. Okay. In terms of myself as a trader, I am personally managing, okay, this is not 300,000, it's actually way more than 300,000 US dollars on my own personal account. Okay, so I've passed FTMO twice. For those who don't know what FTMO is, actually I've not only passed FTMO, I've also passed my Forex one. So these are actually prop trading tests that requires you to do 10% in profit for the month. So I've consistently done that 4 times, month after month after month. Okay, and also there are other stringent rules as well, such as like you cannot have a drawdown of more than 5%. On a daily basis, you need to end the month in 10%. There's a lot of little rules. Okay, so I've passed these tests 4 times already, and today the strategy that I am going to show you guys is I'm going to share with you guys is to show how I managed to get that 10% a month. Okay, I think it was 8. 2 of the tests was 8% and 1 of the tests was 10%. Okay, so if you have any questions at all regarding trading, right? Any questions at all regarding trading, don't be shy, ask in the chat box. Okay, because today we don't really have a very big group. We don't have a very big group. That means that you guys asking me today, I will be able to better understand you. Okay, there are certain webinars that I take that go up to 200 people. Okay, go to 200 people, and I wouldn't be able to answer the questions because the questions keep coming in. Okay, so yes, I'll try my best to help you guys if you guys have any questions at all. If not, we're gonna move on to the live charts. So give me a sec to exit. Let me. Okay, can everyone see my screen? Can everyone see my charts? If you guys can see my charts, can you let me know in the chat box so that I know you can see my charts, because I'm not sure if you guys can see it or not. Okay, so usually when I go to a chart, I immediately clear all drawings and indicators because I don't want to have prejudice or bias of where I think the markets are going. Okay, I want to have a clear mind. I want to let technical analysis let me know where the markets are going. Okay, so I shouldn't let whatever was already drawn in the past dictate what I am going to decide for the charts. When it comes to trading, I'm actually a reversal trader. So I'm usually, how I make the 10% amount is to catch reversal. So catching reversal means that price is moving in an uptrend, right? I use technical analysis and I am able to pinpoint or forecast where I think a reversal would happen. Okay, so here I think, for example, I think reversal will happen. I get in here for a sell and then now it starts that downtrend. Okay, so technical analysis will be able to help you narrow down where things like reversals, continuations will happen. Okay, this is because I was trying to pass a test. Okay, I was trying to pass a test, so that 10% was actually quite strict. That's why I was only catching reversals for that test. But on a daily basis, I don't try to catch reversals. Why? Because reversals does not happen all the time. I rather look for continuation trades. Continuation means it's moving upwards. I get in here for the buy. I get in here for the buy at the pullback. I get in here at the pullback for the buy. I get in here for the pullback at the buy, okay? We will be able to use technical analysis to find those exact spots, or a lot of times, or sometimes you can't find the exact spot, or you can find at least a zone of where you think price is going to reverse, and that's where you can enter for your buy or your sell, okay? So let me just clear the charts. If you guys have any requests on Forex pairs, cryptocurrency or anything at all, please drop it in the chat box and we can analyze those charts together. Remember guys, because a lot of times I'm rushing to go through the charts, I'm trying my best to cover as many charts as possible. So sometimes I might miss something that you see, like for example, okay, there's a double top here, for example, okay? I may not have saw it, but if you see it, do let me know in the chat box, okay? Do let me know in the chat box. Okay, if you guys don't have any requests, I am going to start with USD JPY since we are already at USD JPY. So can you guys let me know in the chat box? I just kind of want to know your profile a bit. Can you guys let me know if you guys are swing traders, day traders, scalpers, and how long have you been trading for? Can you guys let me know in the chat box? Also, actually, I want to know where you guys are from. I see like a lot of different names that I don't usually see. Okay, we've got Dubai, we've got Germany, we've got Singapore. Hi, I'm based in Singapore as well. Got South Africa, London, England. Okay, this is a worldwide crowd, isn't it? It's a worldwide crowd. Nice. Okay, I've actually been to all of the places that you guys are saying because I used to be a air stewardess. So I've actually been to Italy, England, London, South Africa, Australia, Dubai. All these cities and countries you guys are saying, I've already been there before and I love every one of them. Love Italy. I used to go to Italy every year. Okay, so everyone here is from everywhere. Okay, not full-time trader, just learning a month, currently copy trader signals, etc. Okay, if you are not full-time trader yet and you're still learning, this is the perfect place for you to learn. Okay, it's a perfect place for you to learn because I would say trading it's such an easy, it's very, okay, it's not easy. I shouldn't say easy. It's a very learnable skill, right? And I can tell you once you master this skill, it will change your life, right? Like I said, I used to be an air stewardess, right? But instead of now flying with the airlines, I now fly on my own. Because of trading, I think I now get to travel the world more and not with as a job and just going to travel on my own. So learning this skill is an amazing skill to learn, right? It could change your life, possibly change your life a lot. So I do recommend you guys learning it. Okay, and technical analysis is the first thing you should be learning, and then followed by fundamentals. Trading psychology is the first thing you should be learning. Technical analysis, fundamentals, risk management, and whatnot. Okay. Okay, cool. So let's start with the USD JPY. Since most of you, okay, since like there's some of you here that are beginners, I'm not sure if the rest are beginners or if you guys have been trading for a long time since you didn't really say anything, but those that replied said that they're beginners. So I'm going to show you guys from the beginning, from the get-go, how I find my setups. Okay, I'm going to show you guys this so that when you are alone at home, you can go through the charts yourself and you can find these setups yourself, okay, without having to rely too much on coming to these webinars every week. Okay, like because these webinars are only once a week, right, for you guys, this live analysis session. So even days when those webinars are not around, I want you guys to be able to do the analysis yourself and to chart yourself and find setups yourself. Okay, let's start with number one. You need to ask yourself what kind of trader you are. So if you are a day trader, there's three kinds of trader. One is a scalper, a day trader, and a swing trader. Okay, so I don't know what kind of traders you guys are, but I personally am a day trader. A day trader means my trade lasts within 24 hours. Swing trader means your trade lasts for more than 24 hours. It can last to a week, month, maybe months and weeks. Day trading means as long as within 24 hours, and scalping means maybe 1 hour, maybe 15 minutes, maybe 2 hours max. Okay. So I personally am a day trader. Why did I choose to be a day trader? It's because I only wanted to come and look at the chart once a day, right? I only wanted to look at the chart once a day. Hey, okay, there's more of you joining. Hi, Ismail. Hi, Mo Wada. Hi, welcome, welcome. Okay, I only wanted to look at the chart once a day, so I chose to be a day trader. I spend maybe 1 hour a day on the charts looking for setups. It's It's not that hard. I can tell you guys that the only hard thing about trading is learning how to trade. But that's the same with anything, right? Learning, you know how Olympic athletes, they spend like 4 years, for example. They spend 4 years training for that, for their event in the Olympic, which is like maybe 1 minute event or 3 minute event. So it's the same as trading. Learning how to trade is the time consuming thing, but trading and looking for setup itself is actually not that long, and it's actually not that time consuming. So once you know what you are doing, trading becomes very simple. Okay, so let me teach you guys how I would usually look my setup. Because I am a day trader, I will look at the 1 hour time frame and the 4 hours time frame. Okay, I'll use the 1 hour to look for my entry and the 4 hours as a reference. Okay, if you are a scalper, you can go anything below the 1 hour. If you are a swing trader, you can go anything from the daily, weekly to monthly. Okay, because I am a day trader, let's look at the 4 hours as reference. So I'm going to go on the 4 hours. The first thing I want to ask myself is, one, what is the current trend? So can you guys let me know in the chat box so I know if you guys are still following me? Do you think price is on an uptrend or a downtrend? Okay, thank you. Thank you, Etty. Currently sideways. Okay, good observation, Kurt. Good observation. Okay, so if you're looking at it, it does look like it's on a long-term uptrend. Okay, let me see if I can draw a ascending trend line. Let me see if I can draw an ascending trend line. Nope. Okay, so an ascending trend line or descending trend line requires 3 touches. Okay, in this case, there's only 1 and 2. This part didn't touch, so it's not counted. Okay, so this is not a valid ascending trend line. Okay, when you are drawing anything using technical analysis, you want to draw it as accurate as possible. Okay, as accurate as possible. Okay, Kurt is actually right. It is moving sideways. So if we look at this bigger picture, yes, it looks like it's going up. But if we look at the very current, very close to the latest price, it is actually going sideways. So if it's going sideways, one thing you can do when it's a sideways market is happening, one is you can trade within the rectangle. Number 2, sorry, there's 3 things. Okay, there's 3 things. Number 1, you trade within the rectangle, which I will draw shortly. Number 2, you wait for the break of the rectangle. And number 3, you just stay out. Okay, you just stay out. So usually I just wait for the break of the rectangle to confirm the trend. Okay, so now we are going to, after we have identified trend, the second thing I usually do is look for support and resistance, horizontal support and resistance. So we've got a resistance here, which is always above current price, right? And we've got a support here. I guess the support and resistance can be drawn better, right? It can be drawn closer here. And this resistance here, but the thing is, because it's another resistance very nearby, I'll just use the one that's a bit higher, and I'll just highlight this zone instead, because remember, support and resistance is not one single area, it's usually a zone. Okay, so I'm gonna link this top part here, these 2 swing highs to this swing high here. Okay, so the easiest way to look for support and resistance is to look for swing highs and swing lows that are closest to current price. Okay, so I'm just going to change this to red. Anything that is red means that it is, oh, what's going on? Okay. Just give me a moment. I'm trying to change the colors. Why am I making sure everything is so neat? It's because, okay, let's say you do your charting right now and you decided you want to go to the cafe with your friends. You actually can go to the cafe with your friends, come back, and your chart would still make sense. Imagine if you were drawing things and you didn't label your chart. When you come back, you yourself will be confused at what you drew. Okay, so I'm going to mark that as first resistance, and this is first support. Okay, if you go to trading view, it might not look like this because these are the settings that this is the template that I have set up. Okay, you need to set up your own template. Okay, there is clearly a rectangle happening with USD JPY, right? So what do we expect when we see a rectangle? We usually expect price to continue moving within that rectangle, okay? Continue moving within that rectangle. So there's no point of me pulling the Fibonacci out. We're gonna have to move on to a different chart after this USD JPY because markets is going sideways. My strategy works very well on trending markets. Okay, this market is going sideways. It's very hard for me to show you guys the full potential of the full analysis of my strategy. Okay, so once I identify a rectangle, usually you can do two things. Okay, again, one, you enter here for a sell because you think it's going to go up and down within this area, right? Or two, what I usually do and why I do this is because I want a confirmation of trend. Again, I said I am a trend trader. I'm a trend trader. This is my strategy. Okay, I either wait for the break of the resistance, wait for price to pull back to the place that it broke, and I enter for a buy, or I wait for price to break the support, pull back, and then I enter for a sell. Okay. In this case, my strategy would not work very well for sideways market, and that's totally fine. As a trader, you don't need to stay in one chart. Just go to the side, look. Let me show you guys. The amount of things you can trade on a daily basis, okay? Just Forex alone, there's all the USD pairs, there's the GBP pairs, there's the Euro crosses, there's the AUD crosses, the NZD crosses, the Canadian crosses, okay? The majors, the minors, the cryptocurrency, there's so many things. If you go to a chart, the chart isn't saying you and isn't telling you anything, it's not working out, you can't find analysis, fine, move on, find another chart where you can make money from. Okay, you don't need to dwell on something that isn't going to bring you profit. Okay, so let's move on. If you guys have any requests, do drop it in the chat box. Do drop it in the chat box. Let's see GBP USD, since I do see two people, Mowada and Kurt and Ola. Okay, there's three of you from London, right? Or England, rather. There's three of you from England. Let's see how the GBP is doing. Okay. Again, first things first, you want to identify trend. Can you guys let me know in the chat box so I know if you're still following me? Do you guys see an uptrend or a downtrend? Okay. Anyone else? Okay, let me zoom out a little so you guys can have a better picture. Okay, so we've got mixed answers here. I personally see a downtrend. Okay, again, I want to tell you guys, when you're doing technical analysis, there is no right or wrong. Okay, there is just which way you can do better. Okay, whichever is better. I'll give you an example. Like some traders, they would draw their trend line like this. Okay, they would draw their trend line like this. But I personally draw my trend line like this. Okay, there's no right or wrong, both are correct. It's just that which will give you information that is relevant to the current thing that you're looking at. Okay, so for me, I do see a downtrend. There is possibly an uptrend if you go to the small time frame, but on the 4 hours, I only see a downtrend. Okay, so not only is it on a very big downtrend here, it is also on a smaller downtrend here. Okay, so it just means, again, why are we identifying trend? Because we need to know what is the pressure. Is it bullish pressure or is it bearish pressure? Because that is the thing that helps you like gives you an idea whether you should be looking for a buy or a sell. So if markets is going down, we ultimately should be looking for a sell entry, okay? Because we are catching continuations. The strategy that I'm showing you guys today is to catch continuations. Reversals, a lot of profit, but it's hard to catch, okay? So you make a lot of profit from reversals, but it's and the risk of reward is crazy, but it's hard to catch and it doesn't happen all the time. So it's totally fine. We don't need to catch reversals. We can play the continuation too. Okay, so our bias at this current point of time is sell, right? This is our current bias. It is a sell. We're gonna now highlight some support and resistance. Okay, I see price at a resistance right now. Get ready, there might be a sell from this exact area right now. Okay, I'm gonna zoom in. So once we have identified our support and resistance, we basically already identified our entry, stop loss, and take profit, right? Support and resistance, the only reason we highlight support and resistance is because this is your possible entries. Okay, so this is your resistance here. I'm gonna change this to the first resistance. And this is the first support. So the next resistance that I possibly see would be very significant one would be here. Okay, let me go through this again. This is probably the second time I've taken you guys with IronFX. Okay, I need to do this analogy so that you guys can understand me better. Okay, so this is Bob, right? This is Bob. He's walking to the right. This is the ground, sorry. Walking to the right, he's walking to the right. He reaches a door, okay? He reaches a door. If he pushes the door, and the door is made out of titanium, for example. Okay, I don't even know if titanium is heavy. It's made out of a really heavy rock, okay? It's a very, very heavy door. No matter how hard he pushes, he can't get through to the next room. What do you think he's gonna do? He's going to turn back, right? He's going to turn back, okay? So similarly with price, price is at a door right now. So your support and resistance is the door. Price is Bob. Bob right now, price is trying to break. No worries, RK. Take care. Okay, price is trying to break this door or this resistance so that it can go to this room or this area, and then the second resistance will be its next door. Okay, so the question is, now you have identified the door or the resistance area. Is the next question you want to ask yourself, is price going to break through or is it going to reverse? Okay, so now you need to know the strength of this resistance area. You need to know how strong this resistance area is. If this is a strong resistance, price is going to have a hard time breaking it and it will have to turn back. If it's a super easy resistance, it's not even significant at all, price is going to break and go higher. Okay, so how do we identify or measure the strength of the resistance? Does anyone know? Can you guys let me know in the chat box if you guys have any idea how we can measure the strength of supply resistance? Okay. All right. Okay. So I guess everyone's by combining multiple things. Thank you, Kurt. That's true. By looking for confluence. So you're looking for confluence in this area. Okay. Sorry, I shouldn't have erased my Bob drawing. I have to draw it again. Okay. So Bob, the door. Okay. Now Bob reaches the door. We don't know if the door is heavy or not. We're gonna now identify if the door is heavy. How do we do that? We use Fibonacci levels, okay? I won't be able to teach you guys Fibonacci today because it's an entirely huge topic on its own. It's a very wide topic on its own. It's impossible to teach in the next half an hour. Anyways, today's session will be live analysis. Okay, my whole aim today is to show you guys how to get analysis. Okay, so here at the side, you got all these Fibonacci tools. Fibonacci tools is a form of calculations, a technical analysis calculation that you use to see where support and resistance is. Okay, so before you even use Fibonacci, you need to identify the patterns on the chart and if it even allows you to use Fibonacci. So there's 4 patterns you want to look out for when you're using Fibonacci. Okay, we've got the Fibonacci retracement, which is number 1. Okay, we've got Fibonacci extension, which is number 2. It kind of looks like a Nike tick. You know the shoe brand Nike, right? We've got the zigzag pattern, like the Harry Potter on his forehead, and another zigzag pattern, okay? So right now, we need to identify the pattern that's even available on the charts before we can even plot the Fibonacci. So first thing I see, a Fibonacci retracement, which is number 1. You see this? Number 1, it's on the charts. You guys see that? Okay, the second thing I spot is number 3, a Fibonacci projection, number 2, okay, which is a zigzag pattern. Okay, let me see if I spot anything else. Number 3, I spot a Nike tick here. Do you see that? Okay, number 4, there's probably even smaller Fibonacci projections along the way here. Okay, so you need to identify this. I've actually heard a podcast where they were saying the number 1 traders in the world, people who make a lot of money from trading or take a lot of profit from trading, are people who like to solve puzzles. Okay, because if you think about it, there's so much information on the charts, right? There's so much information on the charts. Your job is just to identify the information. Like there's a Fibonacci projection here, but if you don't know, you can't even identify it to begin with, you would have missed the information here. Okay, what do you search when I'm looking for this? I have a checklist of what I look for when I'm looking at the chart. Again, we did the trend line already. We did trend. The first thing is trend. Second thing is support resistance. The third thing is Fibonacci. So now we're doing the Fibonacci, which is the third step. Okay, so now we're going to pull out our Fibonacci tool to identify what are the levels that line up on the first retrace resistance. Okay, we've got 23.6. By the way, Fibonacci retracement has 5 levels. We're only taking the level that is closest to your first resistance. The rest of it, I'm going to get rid of it. Why? Because I want to keep my charts clean and tidy. Want to keep my charts clean and tidy so that later when I come back to the charts, I know what I drew. I can understand my own drawing. Okay, we got a Fibonacci projection lining up there, 61.8. Let me see if I can find more things lining up here. I'm taking it from this swing high. Nope. Just give me a moment. Okay, I found 2 things lining up here. Okay, what is the significance of Fibonacci levels? Let me show you guys. Okay, Bob is reaching the door. We don't know if the door is heavy or not. The door represents your first resistance or your first support, right? Okay. Fibonacci represents a 10 kilo rock behind the door. So if there is a 10 kilos rock behind the door, it means that when Bob gets here, he will have an even harder time pushing the door open. I'm not saying he cannot push the door open forever. I'm just saying that he will have a hard time pushing the door. If Bob is someone who goes to the gym a lot, he has a lot of muscles, right? If he has a lot of muscles, when he reaches, he would be able to push the door. Similarly to price, if the bullish momentum is so strong, price would be able to break this area, okay? But if the bullish momentum is not strong enough, price has no choice but to turn back. And that's where you enter here for a sell, okay? So the more Fibonacci levels lining up in the exact same area, the stronger that exact same area is, okay? If it lines up near or on top your resistance and support, it just means there's a 10 kilo rock behind the door and Bob will have a very hard time pushing. I don't think price is going to break this because why? Because of the current bearish momentum. It is very bearish right now. There's so much bearish pressure. Okay, price is going to have to fight super hard to break this area. That means we most likely might be able to enter here for a sell. Okay, might be able to enter here for a sell. Sorry, I don't know why I didn't see this earlier on, but I do see a channel, right? I do see an descending channel here. Okay, I'm trying my best to adjust it to the best of my ability because again, we want to collect information that is accurate. Okay, so I see a descending channel. I'm going to change this to bearish channel, which is red. Anything that is red means that it's going down. Okay, I expect price to go down. Okay, problem. We've got a problem. Okay, price could possibly reverse from here, but I would much prefer if price reversed from the support area, because now that we have identified a downtrend, we expect price to move within this descending channel. Okay, so it would be much better if all of this Fibonacci levels, the first resistance, all lines up nicely with this channel. So if I pull this channel a little bit longer, you will see this is where the lineup happens. Okay, you see, that means there's even more barrier and even more resistance in this area. If price was in this area right now, you can bet that I will be calling for a sell for sure. I will be very confident with this sell. Okay, because the channel is structured in such a way, it makes me feel like, oh, there is a possibility price might go up a little bit more before it decides to reverse. Okay, okay, cool. Now that we have identified how strong this resistance is, which I think is fairly strong because we've got two Fibonacci retracement and Fibonacci projection lining up at the same area. Okay, so it's undeniable that there is some form of resistance here. Okay, and price will have a very hard time breaking this area. Okay, now that we've pulled out we've basically got our on charts analysis already. We basically got analysis already. So our analysis, what have we concluded based on probability, based on what we've collected? We are very biased that price will go down from here. I'm going to change this to red. Okay, we are very biased that price is going to go down from here. Okay, but now we need double confirmation. We need double, triple confirmation. It's the same with life. Okay, same with everything you do in life. For example, you want to buy a dress. You want to buy a pink dress. You don't know if it's nice or not. So you ask your mom, hey, do you think this dress looks nice on me? Your mom says yes. You go ask your dad says yes. You ask your grandma says yes. You ask your sister says yes. This pink dress looks good on you. If enough people tell you that the pink dress looks good on you, you're going to end up buying it because that's confirmation that you are making the right choice. Okay, so technical analysis does that for us. It is basically a calculated risk. It is a calculation of where we think price is going to go. Okay, it is just a calculation of where we think price is going to go. Sorry, let me silence my phone. It is vibrating. Okay. Okay, cool. Now that we've got this, we need the double, triple confirmation. How do we do that? We add indicators. So if you go into technical indicators, you will see hundreds of indicators available. Okay, 50% of the indicators are going to tell you that price is going up. 50% of the indicators are going to tell you price is going down. This is why the indicators should be the last thing that helps you get your confirmation. Okay, the indicator should be the last thing that helps you get your confirmation or do your analysis. Your analysis should be number one, looking for trend first. Number two, support and resistance. Number three, adding Fibonacci levels to your support and resistance. And number four, only number four, you add in the indicators. Okay. So the indicators that I like to use, I favorite here, is, okay, Bollinger Band is not too bad as well, right? Bollinger Band is not too bad as well. Oh, okay. Yes, we're going to use a Bollinger Band today. The indicators that I usually use are these few. I don't know if you guys want to take a picture or if you guys want to jot down the indicators that I use. Why I use these indicators? Because I find that they give very accurate information. Okay, there's so many indicators here. You don't even know which one is effective and which one is not effective, right? But based on back testing, we have found that these are the effective indicators. You guys need me to pause here, or are you guys good? Should I move on? Okay, cool. Okay, so the Bollinger Band we've got here. Fibonacci levels we don't really use. I don't know why it's in our favorites. Okay, we've got the Ichimoku. We have got the stochastics. We've got the RSI, MACD. Moving average is good to use, but moving average is already combined here with our Ichimoku. Okay, so we're gonna go indicator by indicator to analyze where we think market is going and if it is agreeing with our analysis. So let's start with the Bollinger Band, okay? So why I think price is going to reverse from here is number one, how you use the Bollinger Band is, you see this middle line here? Usually if price cuts above this middle line, it means that it's going up, okay? If price cuts below this middle line, it usually means it's going down. You see how there is a middle line lining up here near to our resistance. That middle line is a form of support and resistance. Okay, so now not only do we have the first resistance, the two Fibonacci levels lining up there, we also have the Bollinger Band middle part, which is a moving average, as a form of resistance. Okay, so price would need to break the 61.8 Fibonacci projection. It would need to break the 23.6 Fibonacci retracement. It would need to break this horizontal pullback resistance, and now it will also need to break this moving average of this Bollinger Band before it can go higher. There is so much resistance here, and on top of that, price is going on a downtrend. Okay, so there is a lot going on here. Okay. Yes, we just use the standard settings. We don't change the settings. Okay, next, I'm gonna turn off the Bollinger Band and I'm gonna pull out the Ichimoku. Okay, how we use the Ichimoku? As long as price is below the cloud, it is bearish. If price is above the cloud, it is bullish. If the blue line, which is the conversion line, is below the baseline, which is the red line, it is bearish. If the blue line is above the red line, it is bullish. So Ichimoku cloud is agreeing with the analysis. Ichimoku cloud is saying that price is on a downtrend. Right now, we've got Bollinger Bands agreeing with analysis. We've got Ichimoku agreeing with the analysis. Let's see what the oscillators are saying. Let's see what these indicators are saying. So the stochastics, we use 21, 5, and 3, okay? The settings that we use for stochastics, I'm gonna write it down, is 21, 5, and 3. Okay, oh. Let me just, 21, 5, and 3. Now we see what stochastics is trying to tell us. Okay, stochastics isn't saying that it's a sell. Okay, give me a sec. Let me try to analyze this a bit. Okay, stochastics is not saying it's a sell. In fact, stochastics is saying it's a buy. Okay, so you've got two indicators telling you it's a sell, one indicator telling you it's a buy. Okay, let's see what RSI is saying. RSI is possibly saying that it's a sell. Okay. Yes, so how I use the stochastics is to look for support and resistance. To look at support and resistance as well. Let me see. Okay, RSI is at a resistance, but it looks a bit sketchy. It looks like it wants to break the resistance. Okay, let me see what MACD is saying. Okay, so the problem with MACD, bearish pressure is consistent. It's saying it's at a bullish. It's a bit bullish right now. Okay, MACD is not really giving us very relevant information. In fact, MACD might be signaling a buy. Okay, might be signaling bullish pressure. Okay, okay. So I have good news and bad news. You buy a pink dress. You're at a store and you don't know if you should buy the pink dress or not. Okay, you are making a decision. Should I buy this pink dress or should I not? You ask your dad. Your dad says, "Yep, it looks good on you. Get it." You ask your mom. Your mom said, "Yes, it looks good on you. Get the dress." You ask your grandma. She says, "No, I think the dress makes you look very very short." Okay, I think the dress makes you look shorter than you are. You ask your brother say, that pink is not a very nice pink, don't get the dress. Okay, so question is, do you get the dress or not? So how we decide when I'm doing technical analysis is that if I'm looking at 5 indicators, if majority of the indicators are agreeing with my analysis, I will take it that I'm good to go. Okay, the best is if I'm using 5 indicators and all 5 of the indicators are telling me it's a sell, that's the best. That is the best case scenario. Okay, but a lot of times it's very hard to find such best case scenarios. If out of 5, 3 indicators are telling me it's a sell, 2 is telling me it's a buy, I will get in for the sell because I think based on probability, my chances of it being a sell is high. Okay, so let me tell you what's happening. RSI is saying it's a sell. Bollinger Band is saying it's a sell. Ichimoku is saying it's a sell. Stochastics is saying it's a buy, right? Do you weigh all 5 in the same, or do you think some are stronger than others? Okay, the indicators that you use depends on the charts as well. Okay, it depends on the kind of charts you are looking as well. I'll give you an example. Okay, I'll give you an example. Price is moving on a downtrend right now, right? Price is moving on a downtrend. So when you're looking at stochastics, you notice that every time it reaches the resistance of the stochastics, it's very accurate. In here, it turns back. On the chart, it turns back as well. Here, it reaches the resistance, it turns back. On the chart, it turns back as well. Okay, here it reaches the resistance. On the chart, it reaches the resistance and it turns back as well. So stochastics in this case is very accurate for looking for sells, looking for downtrend. Okay, but when it is for the buy, here price is going up on the stochastics, but here on the chart, you can see it only went up a little bit. It went up a little bit and then it continued down. Okay, why? Because this chart is on a downtrend. Okay, so stochastic will be more biased it will be more biased and it will be more accurate when it is at the resistance area. Right now, it's at a support. It makes me want to take this support with a pinch of salt, okay? It makes me not want to take this support very seriously, okay? So how you weigh the indicator and how effective the indicator is also depends on the chart structure. Okay, I am going to erase all of this. I just realized the chart looks not very clean. We want the chart to look very clean so that we know what is happening. Just give me like 1 minute to clear everything. Okay, I'm gonna clean out the Ichimoku as well so that you guys know. I'm gonna erase Bob. Okay, so although stochastics is saying it's the same as, again, I'll bring you guys back to that pink dress example, okay? You ask your brother, should I get this pink dress? Your brother's like, no, that pink dress looks very bad and you don't get it. You're not gonna take your brother seriously. Why? Number one, because maybe he's a boy. He's very boyish. You're not gonna take him seriously. Number two, maybe he doesn't have a very good sense of style. When you look at his dressing, it's very bad anyway. So you shouldn't be taking advice for someone who doesn't dress very well anyways, right? So similarly to the indicators, right? Although stochastics is saying it's a buy, we need to take note that stochastic works better when it's looking for a sell for this chart because chart is going on a downtrend. Okay, so you need, if you are going to use the information the indicators are giving you, you also need to know how effective that indicator is working on the current chart and the current time frame you are looking at. Okay, so I have to safely conclude that I'm very biased of this sell right now. I'm going to safely conclude that I'm very biased that price is going to reverse from here and sell here. Okay, so that is exactly how I will look for my setup. Okay, last thing I would do you guys want me to write a list, a checklist for you guys? Do you guys want me to write, or is that you don't need it? If you need it, let me know in the chat box. If not, I'm going to move on. Okay, no one's saying anything. I'm guessing you guys don't need the checklist. Okay, fine. I'm just going to verbally say it. Look for trend, support, resistance. You're looking for trend, support, resistance, back up and support resistance with Fibonacci levels. Number 3, back it up with indicators. Sorry, number 4, back it up with indicators. Number 5, the last thing you want to do is the last confirmation you want to do before you get into a trade. You already asked your mom, your dad, your brother, your sister. Now you're going to ask your cousin, hey, is this pink dress okay for me? What are you going to do? Reversal, candlestick pattern. Okay, this is the last thing you are going to do. I cannot teach you guys this today because it's an entire topic on its own and there's so many chart candlestick patterns out there. Instead, you guys can Google for fast answers. Okay, so these are the example of reversal candlestick patterns, right? There you go. Bearish engulfing, bullish engulfing, doji, shooting star, morning star, inverted hammer, hammer, evening star. I told you guys, trading is not hard. It is the learning part that is hard. It is the being able to identify all of this on the chart. That is the hard part, okay? So trading is not hard. It is whether your eyes can even catch the pattern. That's the hard part. That's just training though. It's just training. Okay, so right now, look at this candle. Look at this candle, the latest candle here. If this closes as a reversal pattern candlesticks, it is our final confirmation that this is a sell. Reversal pattern candlesticks. Okay, so if it closes as a bearish tweezer, if it closes as a bullish tweezer, if it closes as a hammer, if it closes as a let me see. I'm trying to find an example. Okay, if it closes as a spinning top, it closes as a doji. Okay, if it closes as a reversal pattern candlestick, you are good for this sell. Okay, If you don't want to wait for it and you just want to jump straight for the sell, you can as well. Again, you can as well. But of course, asking for more opinion, getting more information and getting more confirmation is better than just jumping straight in it. Okay, so the last and final confirmation you want to get is from the candlesticks. Look for a reversal pattern candlesticks, maybe a spinning top, a shooting star. Okay, one of that. If it closes, you guys should be okay for sell. Okay, so do we have any questions? Is anyone confused with the entire process? I know, okay, it took me 1 hour. It's already 6:56 now. It took me 56 minutes to explain this strategy to you guys. But honestly, when I am charting, it takes me 5 minutes. When I am charting, the most 10 minutes or the most, okay, the most, I'm sure. Maximum I spend charting on one single chart is 10 minutes. But because today we have a lot of beginners, I need to explain to you guys why I'm doing certain things, why am I doing certain things, and the process of looking for a chart. Okay, so we still have 4 minutes. I can probably chart one more. Let's start with USD CAD, for example. Okay, so for hours, I see an uptrend. Okay, this is not a good chart. I need a chart that is trending. Again, I need a chart that is trending. Okay, there you go, AUD USD. AUD USD, okay, downtrend. I'm gonna show you how I chart. Max takes me 10 minutes, 5 to 10 minutes a chart. I go through about 20 charts a day. Okay, I can go through 20 charts a day, or if not, I will just, if I don't go through 20 charts a day, whenever I found my probable trade, I immediately stop charting, okay, because I don't want to spend too much time on the charts. I don't want to spend, I actually want to have a life, right? You shouldn't let, do you use the 4 hours only to do analysis? Sorry, I usually do the 1 hour, okay, but I got caught up with the 4 hours. So usually I go to, okay, right now I'm doing the analysis on the 4 hours. I go to the daily to look for trend. Okay, daily trend, downtrend as well. It's also a downtrend. Okay, cool. I got my trend. Now I'm going to the 4 hours to continue. Just now I was supposed to do 4 hours, look for trend, and then go to the 1 hour to look for support and resistance. Okay, yes. So I'm on 4 hours. I see a descending triangle forming. Descending triangle, I expect price to break on this side because that's how descending triangles usually work. It usually breaks on the horizontal side. I'm a little bit more biased on getting in for a buy. So this is going to be my sell entry, okay? Just based on that, what I'm going to do. Now I'm going to look for a take profit area. This is not a good chart to chart on either, actually. To be honest, this is not a very good chart. That USD JPY was a good chart. Okay, nope, not a good chart. Sorry. Wouldn't be able to find you guys a nice setup. We can go overtime for a bit. Just give me a sec. Sorry, not USD JPY, the GBP USD. Okay, found one. Price is going in an uptrend. I'm biased to look for a buy because it's going uptrend. I don't want to go against trend. We're going to highlight a few levels here. Okay, this is going to be my stop loss. This is going to be my buy entry. And this is going to be my take profit area. Okay, I'm gonna pull an arrow so I know what I'm talking about if I go for lunch, so I don't get confused. Okay, need to test out the Fibonacci levels to see if this is a strong enough buy support area. Good, we have one resistance already. I mean, one Fibonacci level already. Good, we have 2 Fibonacci levels already. I'm gonna leave this. I think this is a stronger one. Okay, my take profit can either be there or it can be closer, which is here. Okay, because there's another resistance there. Stop loss, I usually put it here, or I try to find a nearer one. There's a nearer one here. Okay, next thing I do, back up my analysis with indicators. Okay, immediately, I'm not very keen to get in a trade. Why? I'm immediately not very keen to get in a trade because price has just broken the Ichimoku cloud. Okay, so it's not every day the stars align, but let's say the cloud was below here, for example. Pretend this was the cloud. That's just confirmation for my buy. Okay, that is confirmation for my buy. Okay, there's two things I can do now. One is play the sell from here to here now, or I totally just stay out. Okay, or I totally just stay out. And in this case, I prefer to stay out. Why? Because price is moving in an uptrend. I want to follow trend. Yes, I can go against trend. Yes, I might make profit going against trend, but I do not want to take the risk. Okay, but yes, that's how I would have found my setup. So usually on a daily basis, I've already mastered that thing that I show you guys in that 1 hour, how to look for setup. And then I go chart by chart by chart by chart to look for the setups itself. Okay, until I find one that is probable, I find one where all the stars align. I don't know if you guys got into this GBP USD, right? But it looks like it is forming that candle, that spinning top candle very nicely, which is a reversal pattern candlestick. Okay, that's all I have for you guys today. I will catch you guys next week if I'm taking you guys. If not, I'll catch you guys the next time I take you guys, okay? Thanks for attending, guys. I will see you guys again. Thanks, Abdul. Thanks, Ati. Thanks, David, Ivor, Kurt, Ola. Thanks, Muhammad. Thanks, William, and Will. There's 3 Williams here, okay? Thanks, Joash. Thanks, Braid. Thanks, Tuan. I will see you guys again soon.